So today we discussed a topic about the RBI's structure and functions of RBI. First, what is RBI? The full form of RBI is Reserve Bank of India, and it was established on April 1st, 1935 in accordance with the provisions of the RBI India Act 1935. I mean, this act was passed in 1934, but actually this organization will be existing when we start work in 1935. The central office of the RBI was initially established in Calcutta and but was permanently moved to Mumbai in 1937. The main center first, this organization was established in Calcutta, but now the main office is in Mumbai in the year 1937. The central office where the governor sits and where policies are formulated. In this office, the governor are sit and they have redefined the policies and maintain the rules and regulations in the RBI. So originally privately owned, since nationalization in 1949, the Reserve Bank is fully owned by the government of India. It's the only one organization who printed the notes and start a circle of give the money to the numerous bank, provide the money to the numerous organizations. Structure of RBI. First, central board. In the central board, the RBI affairs are governed by the central board of directors, and the central board of directors is the apex body in the government structure of the RBI. Means this is the main body of the RBI, and this body and their basic today we have 4 local boards: northern board, southern board, eastern and western board. Means we have 4 directors in each and every region: north, south, north, south, east, and west. From every region, we have selected one central board of directors in the RBI. Areas of the country which take care of local interests. The central government appoints nominate director to the central board and member of the local board in accordance with the RBI Act. The composition of central board is enshrined under section 88(1) of the RBI Act 1934. Means it is a need of organization because first we need the person who helps to run the RBI in the numerous regions. Basically, central board consists of the governor, 4 deputy governors of RBI, 4 directors nominated by the central government, 1 from each of the local boards constituted under section 9 of the Act. Means first this Act was passed, then they will hire these people to run this organization. 10 directors nominated by the central government and 2 government officials nominated by the central government. These person total we have to require 20 person who run this organization in a systematic way. Basically, central board is issued 3 committees. In this structure, they have established 3 committees. Give the name: the committee of the central board, the board of financial supervision, the board for regulation and supervision of payment and settlement system. Means first there is one committee. The second committee is who manage the finance of the and who monitor the finance in the organization. The third committee will played an important role in the regulation, the rules and regulations, and supervision of payment, which they have to provide to the numerous banks. So these are the organizations which helps to run the RBI, and these are the people who works for the RBI in the different regions. Now we discuss the functions of the RBI. First, they have monetary authority. The RBI of India, being the central bank of the country, is the monetary authority of India, and the sole authority vested with the power is to issue currency notes, regulate the supply of currency, and credit in the economy to secure monetary and price stability. Means only this organization prepare a currency for the citizen, and they will supply the currency to the numerous institutions which they need. So in this way, they can add the money in the nation and improve the economic value of the country. So there is only one organization who prepare the notes and supply the currency all over India. And in this way, they maintain the price stability in the nation. Only this organization have authority to supply currency. No one have authority to supply currency to the numerous organizations. Second, regulate and supervise financial stability and financial inclusion. It also the responsibility of RBI to regulate and supervise the banking sector with an eye on securing financial stability and financial inclusion. First, RBI provides the currency to the bank, but now it is the duty of the responsibility of the RBI. They have which money we have to provide to the bank. They properly utilize the funds, and in this way, they maintain the stability in the banking sector. They have to monitor the each and banking sector in the organization, because if they provide the currency to the bank, then how they utilize, where they utilize. So they have to maintain proper record. Then they send a copy of the RBI. In this way, they can monitor the each and every sector of the banking by the RBI. The next one is currency management. The currency management is the process of managing the life cycle of the note, which includes means first they have to manage the money in the organization. First, assessing the printing requirements of various denominations of notes. Means when they supply the currency, they need printing machines. Those who print the notes according to the requirements of the country. Then they have to place the indents with the note printing press. Means when they print a note, they mention the proper indents on the note. Supplying and distributing adequate quantity of currency throughout the country. Means they have to supply the money and distribute the money to each and every sector. And they do not they do equality. They do not so they have to divide the funds sector wise or the region wise, and in this way they distribute the money to each and every sector. They do not do inequality in case of distribution of money to the numerous regions. Ensuring the quality of banknote in circulation by the continuous supply of clean notes and timely withdrawal of soiled notes. Means it is a duty of RBI. They have to provide the good quality of bank notes to the bank, and the notes will be totally clean. If there is any notes which will not be in good condition, they will withdraw that notes and again they will be the new notes. Foreign exchange management. The Reserve Bank oversees the foreign exchange market in India. It supervises and regulates through the provision of the Foreign Exchange Management Act. This is the act which was passed in 1999. Basically, this function helps to exchange the currency maybe in a dollar in forms. So with the help of foreign exchange management, we can easily exchange our currency, convert it from according to another country. The next one is banker to banks. RBI also acts as a banker to bank and government by maintaining the accounts and carrying out transactions on their behalf, as well as providing them banking services. Means basically RBI, they have directly contact with the numerous banks, and there are so many banks which provide the funds to the numerous another organization. So in this way, government, with the help of government maintaining the accounts, they also check the transaction of each and every bank. Then they provide the numerous facilities to the banks. RBI provides the numerous services, maybe numerous discounts to the bank, which they can easily pay their task in the organization. The next is banker to government. Managing the government banking transactions is one of the key functions of the RBI. Basically, RBI also manages their transaction, from which organization they have to provide how much fund. They also have maintained the proper records, like individuals, businessmen, banks, governments to need a banker to carry out the financial transaction in an efficient way, including the raising of resources from the public. It is also the government also play an important role in this concept, because government also manage the transaction. They also maintain a proper record of how much they provide them to the individuals, to the businessmen, to the banks, to the numerous financial institutions. If they maintain the record, then they can analyze how much funds they have, and because if they have funds, then they can do something for improve the infrastructure of the country. So in this way, they can also increases the funds from with the help of public. So since its inception, the RBI has undertaken the traditional central banking function of managing the government banking transaction. The central bank also serves as an agent and advisor to the government. These central banks also guide the also provides services, also advice to the government. So in this way, the banker has directly contact the government. Also, government helps the numerous banking institutions as they perform in an efficient way and they can maintain a proper record in a systematic way. So in this way, they can avail numerous facilities from the government as well as from the RBI. Next, regulate and supervise the financial systems. Financial system in India is carried out by different regulatory authorities. Means there are so many regulatory authorities who run the RBI. The RBI regulates and supervises a major part of the financial system. The supervisory role of Reserve Bank involves commercial banks, urban cooperative banks, certain financial institutions, and non-banking financial companies. Some of the FIAs in turn regulate or supervise other institutions in the financial sector. Means RBI also supply the money to these banks, which we have mentioned the main is to supervise all these banks, and also they play an important role in the RBI. In addition to those, Reserve Bank of India also represents India at the International Monetary Fund, promotes the growth of economy, acts as a lender of the last resort to commercial banks, strengthen and support small local banks, and encourage banks to open branches in rural areas and publish economic data. RBI also represent the one organization which we give the name International Monetary Fund. Basically, this organization promote it. This organization helps to improve the economy of the country, and it has directly connection to the commercial banks. And these banks improve the strength and some more support the local banks which branches are open to rural areas. And also they will also connect. They will also open the account in the rural areas, and in this way they can also generate the funds in the organization. Thank you.